traders, my name is EURUSd and welcome to a new video update in which we will take a look on the euro dollar, dollar index and Aussie dollar. On the euro dollar we are bearish since we recognized only a free wave bounce from 2012 lows followed by an impulsive structure to the downside through this support line connected from 2012. So ideally this market is bearish and we could see huge 5-wave fall within this wave C down because this 3-wave structure was actually final leg of a wave B running triangle that we have been tracking it from 2008. Okay, so for now we are bearish on the euro dollar. We also labeled this first leg down as a 5-wave movement, and we know that this is the structure that shows you the direction of a larger trend, which should be down on the euro dollar. Now also this recovery already has signs of a corrective movement, which means it should be a part of this larger downtrend, but I'm still not sure if this wave 2 is complete, simply because the price is still trading above this trendline support and as well as above this 12950 swing level. So as long this levels holds, we must be aware of more complex wave 2. However, I am considering potential top in place here, and the reason is dollar index, and I will show you this dollar index wave count a little bit later. But before we can focus directly lower on the euro dollar in impulsive fashion, as I said, I want to see a daily close price below this trend line and as well as below this swing low, which represents swing low of this wave B. Okay, until then we also need to be aware of this wave count, which shows an incomplete complex wave 2, first zigzag, wave X, which connects the second zigzag. Okay, this was a first zigzag, wave X, and a second zigzag. So actually that's still a corrective pattern, and interesting thing is that both wave counts, this wave count and this wave count, are pointing for weaker euro. We just need more price data to confirm immediate bearishness on the euro dollar. Okay, I'm also tracking this huge head and shoulders pattern on a daily chart. This was our left shoulder, had sharp fall and bounce from this area, which is now a swing low that formed a neckline. So now we are in a right shoulder. Now if you remember, in our past videos we mentioned that this was a small pullback or small leg compared to this third leg. Then we had here in this right shoulder extended leg, small pullback, and then smaller third leg compared to this leg. Okay, so for now, if this similarity will remain in place, then I think that this top of right shoulder is very near and that market will turn bearish. Of course, this is a very huge head and shoulders pattern, and of course we need to see a broken trend line before we can confirm a huge sell-off towards 1.2 level. Okay, in any case, on Aussie dollar weekly chart we are tracking a huge triangle placed in wave 4 for some time now, and it seems that we are trading lower now in wave E. As you know, we have turned bearish on Aussie dollar again when the market did not close on a weekly basis above this trend line. In fact, this trend line reacted as a very strong resistance, so of course we listened the price action and we turned bearish immediately. And now we are tracking more complex wave E pullback. Now the interesting thing is that each leg, wave A, wave B, wave C and wave D, were all clearly and only in 3 legs, as you can see here. Okay, and we know that usually one leg of this A, B, C, D and E will turn complex. Okay, which means it will not be structured only by simple 3 legs, and it seems that this complex leg is now wave E. This was first wave A, wave B pullback, wave C. this was a wave X rally, and now it seems that we are headed lower in another 3 wave movement. So actually this is still a corrective price action, even more corrective than these sharp moves, but it supports the idea that usually one leg in a triangle will become complex, and that's also the reason why I think a very quite strong possibilities that we will see test of parity level. Now the next thing is that wave E usually retraces for 61.8% compared to wave B. Okay, so this was 100%, and I took a 61% from this 100%. Just let me show you. Okay, this was 100%, and 61% of this movement I measured it from a wave D high, and I came out with projected levels around 0.950. okay, now this is one Fibonacci level that I'm tracking. The next one is 78.6% retracement, which is compared to wave D distance. Okay, so this is the second Fibonacci level, and then we also have this trend line connected from 2011 lows. So I think that this trend line could be, and these levels around parity or a little bit lower could be tested in the next few weeks, especially if we also consider and respect the price action that we have on a smaller time frames. On this daily chart we can see only a 3 wave rise, and we turned bearish because of a 5 wave fall through this lower trend line of a corrective channel, and that's a very important sign for a downtrend continuation. So ideally this recovery will be fully retraced. Now if we go to the 4-hour chart, again we have this 5 wave fall, as you know. Then we were tracking this wave 2, which we firstly thought it's a flat, but then we reworked it into a WXY, because we know that in a flat, wave C must be subdivided by 5 waves. Well, this rally was only a 3 wave movement, so of course we readjusted the wave count, but in both cases we expected lower levels. Now notice what happened last week. Market made only 3 waves to the upside and reversed sharply from this upper trend line of a corrective channel. Market closed well below this trend line and then made a pullback back towards this trend line, which reacted as a resistance perfectly. Okay, and now again we are testing these lows back from mid-April. So this whole price structure is very clean, very clean pattern for a downtrend continuation. So once again, 3 waves, only 3 waves up within 2 parallel trend lines. So we didn't get a push through this upper parallel trend line. That's very important. In fact, the market reversed through this lower side of this corrective channel, which is your first confirmation that market is headed lower. Then we have only a 3 wave bounce, which reversed from this lower side of this trading channel. So actually this support line here became resistance here, and I think that market is headed lower, and we will be looking lower as long as the prices will trade below this wave 2 swing high. I'm still not sure if this wave 2 is already finished here. It would be too soon, because as you know we need to see a break and ideally daily close below these 2 swing lows. And now let's take a look also on this technical chart. As you know, as I said earlier, in a bear market I want to see prices to stay below 50 period moving average. Well, we can see here that prices moved below this 50 period moving average right here, then tested this same moving average as a resistance in wave 2 pullback, and it seems that now we are going lower. At the same time I can see MACD still in a bearish mode. Blue line is not above the red line. In fact, the red line is trying to hold as a resistance, so I think we are headed lower. And RSI also reversed from this 50 area, which also represents termination point or a limit for a bear market. So in a bear market you want to see RSI to stay below 50 or at least below 60 area. For now we reversed lower from this zone, so I think that we will see new lower readings on the RSI, and at the same time we will see lower prices on the Aussie dollar. Ideally we will see a sharp break higher, lower in wave 3 or 3, which is usually very strong wave. Okay, so we could easily fall down to 101 level in this week, especially if the RBA will cut interest rates tomorrow. Okay traders, that's it for me, and I will see you with the new updates on our intraday updates page. Have a good day. We know that price must not rise above this swing level, because this high represents a high of this start of wave 1, and we know that wave 2 must never retrace more than 100% of wave 1, but ideal reversal point for wave 2 is between 50 and 61.8% compared to wave 1. Okay, and these levels are matching perfectly with this zone of for our top of our right shoulder. Okay, and now let's take a look also on dollar index, and the reason why my primary wave count, where I have this wave count now, why this is my primary wave count, which suggests that top is here in place and that we will see 5 waves down. So here is my dollar index count, and you can see that from April highs market made only 3 waves to the downside. Notice that this bounce last week has occurred from this lower side of this trading channel, which I believe it's a corrective channel. And as you know, if the market is trading choppy and shows evidences of a corrective price action, which means an overlapping slow price action within 2 parallel trend lines, then this is a very important evidence that market is trading only in temporary pause or pullback that is part of a larger ongoing uptrend. Okay, so because the market bounced from this lower side of this corrective channel, which means from this trend line, that's why I suspect that this was a free wave movement and that market will be moving higher in this week. The reason why I'm also looking for end of this wave C here is because on the hourly chart, which is here, I can count 5 waves up, and I can label this really quickly. This was wave 1, this was wave 2, wave 3, wave 4 and wave 5. Notice that wave 4 did not move into a territory of wave 1. Now if you're wondering what is the structure of this wave 1, I believe it was a leading diagonal. So if our wave counts are correct, then we know that current pullback should unfold in 3 waves, and this pullback must not retrace more than 81.33, which is the start point of this 5-wave rise. Okay, so I believe this was a wave A. Now we are trading in a very slow and sideways price action, which I believe it's a wave B, because wave B is also a corrective movement, and I expect a wave C fall towards these levels here around check around 81.90, maybe a little bit deeper, and then we will be looking for evidence of a low in place on dollar index, and at the same time you would of course expect a rise a fall on euro dollar. Okay, and so these clear patterns on dollar index are the reason why we suspect that euro dollar has already reached the top, and we could be looking for some short trading opportunities on the euro dollar. But of course, firstly we need to see this 3-wave fall. For now this pullback still appears incomplete. Okay, so I expect this wave C before we may looking for some dollar long opportunities or euro shorts. At the same time, I'm also tracking this technical chart, you can see that actually price is below this 50 period moving average. As you know, I'm always repeating that in a bull market you want to see price trading above 50 period moving average. In a bear market, 50 period moving average will hold as a resistance. Okay, for now, yes, we are below this level, but I want to see a break higher from that wave 2 that I showed you, and then minor pullback back towards this 50 period moving average that will ideally react as a support. Okay, so that will be also very interesting price action if we get above this level, and even more confirming for dollar bulls. And now let's take a look on the Aussie dollar.